Welcome back to Pulse on the Market, the show designed to help you as an investor make better, more educated financial decisions. I'm your host, Jaden Vrains, founder of Vrains Capital, and I am excited for today. So I was diving into the weeds today, this morning. Here in Utah and Pacific Standard Time, we are 2 hours behind the opening of the market, so that's at 7:30. So we have to wake up super early to get this research in for you guys. And I found a little gold mine, at least I believe it's going to be a gold mine. And I will get into that after the brief overview of how the markets are doing. So first off, the indexes, the Dow is up 0.03%, NASDAQ up 0.08%, S&P down 0.02%, and the small caps up 0.37%, and the 10-year is up 0.61% at 4.148. So it's kind of a relatively flat day in the market. There are some pretty big winners, some pretty big losers. And let's get into some of the winners of today. So I was looking at MDB. This stock has been interesting. This isn't the gold mine I was talking about. But since the beginning of the year, their stock price was at 360, and now it's over 460. It's at 467.7 as we speak. And this has been an insane growth stock for this year. I believe year to date, they're up almost 15%, which is not half bad. Vrains Capital is up over 19% year to date, which is nice. That's a huge success for Vrains Capital, and so it's been a solid start of the year for Vrains Capital. Also for MDB, also for Nvidia, as we know. So Nvidia's up just $0.5 to 701. So it broke the 700 mark. It just keeps growing. This stock is so impressive. And at the beginning of the year, as we know, it was trading at 470-ish, and now it's at 700. That's insane. That's the biggest winner I believe it's the biggest winner in the S&P 500. Don't take my word for it. But year to date, it's already up 41%. So that's insane. 41% year to date, and it's only February. It's the beginning of February. It's February 8th, and they've already risen 41%. There was still more juice in those cannons, in those boosters, and they've seemed to rise more than anyone thought they were going to rise. So just the last year, they're up at 211%. That is a phenomenal investment. I hope you guys were in this pretty early on, and it always seemed like, all right, maybe this is the top and it's going to start dropping, but it never does. It keeps going up. It keeps rising. It's impressive to watch. Super Microcomputer, once again, it's up. It's at $3 a share, up $3 a share. So it's at 686.13. If we look at the beginning of the year for Super Microcomputer as well, it was at 275. This is nuts. So year to date, it's already up 141%. That's nuts. Yeah, over the last year, 716%. That's beautiful. So once again, I hope you guys were in that as well. If you were able to see that pretty early on, they're an electronic technology company. They work in computer communications, and it's just been blowing up. This is impressive. And their market cap's $38 billion, so it's relatively still a small company in comparison to companies like Nvidia that have a $1.7 trillion. We have Meta, which is at let's see what it's at now, $1.12 trillion or 1.19. And then you have your super micro caps, which is Microsoft over $3 trillion, Apple over almost $3 trillion. So it's crazy that a company under 50 billion really is a small company still. I'm not sure exactly where that line is at, but you can have a multi-billion-dollar company and it's still considered small in comparison to these giants that are just worth trillions. And all right, let's get into it. So the stock of the day that I was researching that really caught my eye was Shopify, believe it or not. So just today, they're up 6.7%. They have an earnings report coming out on Tuesday. And let me share with you guys why I think this could be a super solid stock for the next few years, at least 5 years. So this cloud-based commerce company, if you guys don't know, it's how you create the websites, and it's all automated. It's basically drag and drop. And they're expected to post quarterly earnings of $0.31 per share in its upcoming report. All right, that doesn't sound like a lot, only 31 cents a share, but that represents a year-over-year change of 342% increase. So that's just the expected as well. There's a lot of speculation that they're going to outperform that, especially because it was kind of rough for Shopify in the past because of the rising inflation rates and the consumer spending. Once that was lower, then Shopify automatically dropped because that's how they make their money. So with the peak of inflation, it's honestly been going down. So that means that Shopify should automatically increase their revenue and their EPS. And this e-commerce software platform enables retailers, just so you know a little bit more about Shopify, both large and small, to get their businesses online. Users of the platform can not only create an e-commerce website to list their available products, but also make sales, receive payments, handle shipping, stuff like that. And they also offer a lot of analytical tools to help users improve their business performance. I like that a lot. In the second quarter of 2023, their total revenue jumped 31% to 1.7 billion. This is one of the reasons why I'm bullish on it. Their gross merchandise volume of all their products sold over the company's platform, it skyrocketed more than 8 billion to 55 billion. And they reversed a year ago a net loss with adjusted net income of 178 million. So they were losing. Their net income was negative, but they just reversed that, and now they just reported 178 million in net income the last quarter. And it's their positive free cash flow. It's the third posted positive free cash flow in a row, their third quarter in a row, which is good news. We love profitability, and it's a relatively new company. It was made in 2015, but still, it's difficult to report free cash flows that are positive at the beginning of the company, especially when they go public. But now they are reporting that, and it's the third quarter in a row that where they have a positive free cash flow. Okay, I was diving into the weeds and saw that their trailing 12 months EPS in total was 0.46, and their next year's projected EPS is 1.05. EPS is earnings per share. 1.05. That's a 228% increase projected, and since the third quarter of 2022, they've beat their expectations by 200% every quarter on their EPS. That's absurd. And, well, yeah, they did have one quarter where they reported 600% because the estimate was negative and they reported positive, and there was just a huge percentage increase, technically. And so, but still, on average, the other, four quarters would have been around 100 a pop, or the other 4 quarters would have been around 100% each. And that's on average. So I wouldn't be surprised if they also beat this earnings estimate that, if you remember, it was $0.31 per share. I don't see why they couldn't surpass that as well. And their revenue, their trailing 12 months of revenue is 6.69 billion, and they're projected to do next year 7.97 billion. And I've seen crazy revenue growth from Shopify since they started in 2015. It's grown over 61% every year since then, up to 2022. We're about to find out 2023 what their revenue growth was. So it's projected to be around 28%, give or take. And that's the speculated revenue growth for 2023. And what I love most is that the next 3 years, they're still projected to grow at least 18% each year in revenue. That's sustainable growth. I like that a lot. Yeah, they grew 61% every year in the past, but that's also when the company was starting out. And when it's starting out, the growth is a lot quicker. So that's why they're able to see months of 80% increase, a 55% increase, just those insane numbers. But now, as the company becomes more established, that yes, it would be very difficult to just jump from 7 billion all the way up to 13 billion in just one quarter. So, but still, we're seeing growth in the billions per quarter or every year, which is amazing for Shopify. And just looking at the charts too, the charts look good. They're finally coming out of their drought. So post-pandemic, the start of just inflation rates and whatnot, their stock was at 140 now, and it dropped all the way down. Let's see if I can pull up the number real quick, just to see the impact that had. So yeah, wow. So yeah, they were at 170 in 2021, and it dropped all the way down to $24 a share. But since that date, since October 2022, they've just been on the rise. It hasn't dropped nearly as low as that. And they've beat, like, after the earnings report have come out, the last 4 out of the 6 earnings reports, the stock price shot up. So I'll take my chances with that, especially with this 300% year-over-year increase in their EPS. That's a good look for the program. And there's a lot of institutions also raising their price targets. Like CIBC World Markets raised it from $100 a share, or raised it to $100 a share from $82 a share. And there's more institutions that are raising their price on Shopify. Since I started this, it's already up another 2%. It's at $91 a share. And I guess people are starting to see it as well, that of the amazing potential of the stock. And so get ready for the earnings report on Tuesday. It should be solid. We should see some of the earnings priced in already. I believe with the speculation of the stock, of the EPS rising that much, that before the date of the actual earnings report, that Shopify is already going to be slightly priced into the expectation that it's going to grow. So we should see the stock start to rise like we did today. This should be a normal occurrence up until Tuesday. So it's Tuesday morning. So the last time to get in before a jump or fall in Shopify would be Monday. And I would definitely look into it. And also, if you guys remember, I gave a call out for Nike. Not a call out. I didn't give any financial advice. But I explained how when Nike was at 100, that the premiums for the option calls later down the road were insanely cheap. I recommended, or I didn't recommend it, sorry. But I gave some of the prices for a $100 call on Nike. How if you would have done it for March 15th, it was only around $300. And right now you can sell it. Let me check this out. So right now you could have sold that same call. Go on to March 15th. So you could have sold it for $600. You would have 2x that investment. If we go down to the April, 71 days away, when I called it out in a few days ago, a few episodes ago, it was worth around $500. Now it's at $825. That's the value of that call. So that would have been a $300 increase for the long-term call, and they're both long-term, but in almost double for the March 15th expiration date. So those are two very, very good call-outs, and the premiums were just so cheap for Nike calls that it does not have to rise that much for the premiums just to go way high. And as I mentioned, they're in a restructuring phase. Nike is, so they saw a huge drop in their strike price, or in their stock price. But I wouldn't be surprised if it started rising again. It went all the way from 123 down to 99. That's quite an impressive drop. But now it's back up to 105, almost 105. And I wouldn't be surprised to see it rise. It's not the first time the stock has dropped like that. And yeah, I'm excited to see what Nike comes out with after this restructuring phase. Sweet. And speaking of Nike, similar to Nike's Deckers, it's up $12 a share, 1.5%. It's at $8.45. We've also seen some intense growth from Deckers. At just the beginning of the year, it was trading at $6.50, and now it's almost at $8.50. So almost a $200 increase. Year to date, it's up 27%. Deckers. Wow, I was talking about this stock a few days ago as well, and man, we've seen some intense growth out of Deckers. Over the past year, 105% increase. Man, this is a solid stock. They're the ones that have Hoka's and Uggs, and the other two ones are, I believe it's Teva and Sanuk. Someone might have to fact check me on that, but so that is, yeah. So that's Deckers. You've seen Hoka's. Everyone's wearing Hoka's. They're giving it the best reviews, saying that it feels like clouds on your feet and that it helps someone's back pain and whatnot. And also what I do like about Deckers is their forecast. They have a pretty solid forecast. The max is 1150, which is a 35% increase. Their average is around 900, and that's up 6.37%. And the minimum would be dropping 12% at 744. So that seems pretty cushy with the minimum of 744 and the max at 1150. It's always a good sign when the max is a lot higher, the estimate for the minimum. It kind of scares me a little bit when I see that the max is only a little bit higher and then the minimum is just like half of the stock price. So that's always a little scary. But once again, Lilly is doing well. They're up $9 a share, 1.25%, and there's just been good news on it. And I saw that a news report that liver disease biotech stocks crash on Eli Lilly's Mounjaro data just because it's performing so well. So this is good news for Lilly. I'm still bullish on it, as well as Novo Nordisk. We can't forget about Novo Nordisk, which is currently at $111 or $117 a share. And they're in the similar industry. They're working on weight loss drugs to help diabetes, and year to date they're up 16% already. So that's amazing as well. And they just had their earnings report on January 24th. They beat estimates by 6.7%, and they've just shown an increase. The quarter before, it was at the 73 cents a share. Or no, they reported 71 cents a share, and it was kind of similar earnings, but they have seen an increase over the last. So let me double check this real quick. So yeah, we've seen an increase, and just starting with the third quarter of 2022, they reported 0.42, then 0.43, then 0.65, 0.64, 0.71, 0.72. So we just see a steady increase in the EPS that they're reporting. And it's projected to go up in the next year, 0.79, 0.88, and then 0.87. So that would be a steady increase as well. Their revenues are also increasing. So I'm bullish on both Novo Nordisk and Eli Lilly. They're two very similar companies. Novo Nordisk is definitely a lot bigger. So their market cap is $531 billion, and Eli and Lilly, or sorry, I got that wrong. So Eli and Lilly has the larger market cap at $700 billion, and Novo Nordisk is what I listed before, over $500 billion. So still two pretty solid, pretty big companies. Eli Lilly is announcing a dividend, so they do pay dividends, and it's a $1.30 dividend. So their payout ratio is around 78%. So that means with their net income, they're paying out 78% of it to their investors, and they're retaining the other 22%. And so $1.30, and this dividend has been increasing, and so it's not a bad stock at all to both hold for the appreciation of the stock, and you're earning $1.30 per share on dividends. You own 100 shares, that's $130 extra dollars that you're making off of Eli Lilly. So I'm bullish on that. Another stock that I was looking into that I'll have to give a deeper report on either tomorrow or next week is on Costco. I remember Charlie Munger lived and died by Costco. Even to the day he died, he never sold his shares in Costco. He loves it. And they also pay a $1 dividend, $1.02 dividend. And their earnings report is coming up February 24th. So still a little in the future. But they've seen year to date, their growth has been quite impressive as well. Already up 10% this year. And over the last year, it's up 41.5%. I love Costco. It's a very reliable stock. Since January, since 2022, it's been going up. And they saw a minimum of 448, 450-ish, and the stock's now at 726. So we've seen some impressive growth out of Costco as well, and I'm excited to see how this earnings report comes out. I will be doing a deeper in-depth report on Costco to give you guys some more information on that. And just a quick reminder, please reach out to me on marketpulse.io. I swear I forgot again to put that Instagram username in the bio, but I will this time, all right? And don't forget to reach out to me to request any ticker, any stock, and I'm more than happy to do an in-depth analysis of that stock and give it in the next show if I happen to select that stock. So please reach out to me and let me know. And thanks once again for tuning into today's show. I hope you learned a little bit. I hope you gained some better insights on specific things. And actually, before I close here, just give you that quick crypto update on Bitcoin and the entire crypto market. So Bitcoin is still once again at, oh shoot, my bad. Just last day it went up 5%. This is impressive. So Bitcoin is on the rise at $45,237 a share. A coin. Man, I'm in the habit of talking stocks. Anyways, it's up 5% today. So earlier it was at 43,000. Now it's at 45,000. So here's a little run from Bitcoin. This is what we like to see. And yeah, so this is probably just the start of a little run. I don't know if it's going to drop back down, but I am still bullish on crypto in the year 2024, especially with the Bitcoin halving, with the amount of volume that these spot ETFs are holding or that they're trading with. And I see a lot of potential in the crypto market. Once again, it's still in its early adopter phase. It's still a little baby. The technology is still not nearly as developed as it will be 5-10 years down the road. And I think it's not too late right now to get back into crypto, but do not do it just because I said so. That is not financial advice. But once again, guys, thank you guys for tuning in to today's show. I'll be back with you guys tomorrow after some more research, and my goal is to do the research for you guys so you don't have to. And just let me know if you have any recommendations, if you want to see anything in the show, and I will make sure to include it. All right, before I leave you guys, my disclaimer again. This podcast is for informational purposes only and does not constitute financial, investment, or legal advice. The content provided is based on the host's personal opinions and experiences. Listeners are advised to conduct their own research and seek the advice of qualified professionals before making any investment decisions. The host and guests do not guarantee the accuracy or completeness of the information shared, and they are not responsible for any actions taken based on the content of this podcast. Investing involves risk, and it's all risky. And past performance is not indicative of future results. The host and guests are not responsible for any losses or damage that may occur as a result of investment made after listening to this podcast. Thanks, guys. Love you guys. I'll see you tomorrow.